Hello guys and girls, and here is ChainLog Analyst. Today we are talking about a case study I have here about the crypto dominance and the stablecoin dominance for this cycle and the last cycle put in comparison. I'm actually doing a video right here because I don't have time to make a long thread for Twitter, and anyway you can follow me there for charts update that I don't post anywhere else. So if you want to have my deep insight, I have my and not my talky chat on Twitter. You just have to subscribe to my newsletter that is on Substack. Anyway, the links are in the description, and let's go on here. So what I did here is actually I put in comparison these two dominances, and as you can see, we had I put the bull run 2017 until the peak. I divided all of this charted all of this chart in bull, bear, bull. I also divided the bull we had in late 2020, 2021 since April, and then the, let's call it, bear last year in May, June, July. And then the bull run we took to the all-time high, and here the bear ever since that we had, most likely since the end of November. And also I glided the bottom of 2018 where we touched the 3K, okay? And I did the same on the stablecoin dominance. So what I did here is taking the Bitcoin plus ETH plus all coins dominance and put it together, and then I subtracted that dominance to the 100 dominance, the total dominance, to have the stablecoin dominance. We call it stablecoin dominance, even if in this case stablecoin dominance is not correct. One is not 100% correct because we don't have the exact value of the denominated assets between before 2018 right here, so we don't have this kind of 2017 on the stablecoin side. We don't have this dominance, so I'm actually assessing with the data at hand that this was stablecoin, but instead they could very well be not USDT nor USDC, but also USD or any other denominated USD asset. Okay, that was not Bitcoin dominance, ETH dominance, and all coins dominance. So I'm saying this just to make you know the flows that could be in this type of study case I'm making right now. As you see, I also put down the 10, 20, and 30% that are our levels right here to assess whether the change in the trend, how could be that this change in the trend and where it's headed. Okay, in the sense that we are studying this to assess the behavior of the market participants of the last cycles in comparison to the behavior of the market participants of these cycles, where in these cycles we have high net worth investors, companies, and so a different kind of capital, a different kind of market participants, more and more hodlers, and more active user base. So we are here assessing the difference that there is in these two cycles, and also we are watching this to assess the trend for the next cycle, as for the hodlers and the market participants we have today. That could be even more in the next cycle. That can be more and more because they could become in the next cycle a very how could I say it, we could have a mass adoption, so we'll have more and more of this kind of market participants, so this could be the trend. And I saw that there was a difference, but we are now digging into that, so follow me for this. We are in the bull run 2017 in the stablecoin dominance, and you see that meanwhile the price was rising and we were approaching the top that was right here in November and December 2017. We are watching the weekly chart. The stablecoin dominance, or the USD denominated assets, okay, so not the BTC, ETH, and altcoins, were rising. That means that Bitcoin's dominance, ETH dominance, and altcoins dominance were declining. Meanwhile, we were reaching the top, and also 1 or 2 weeks later, when we had experienced a little bit of the first downturn since the all-time high. Still in the same month, however. And as you see, when we reached the lowest point here at 58%, and we were actually in the bear market, crypto dominance in this case tended to rise. So it raised all over since 2017 to 2020, when we had this bull run right here. That, as you see, changed the trend. Here we have an uptrend on the crypto dominance and a downtrend in the stablecoin dominance. And that means that in the stablecoin dominance, we're seeing people entering the market. Meanwhile, the market was going downturn and was in the abyss of here we had 3K, okay, and since then it just went off. Stablecoin just entering the market as the price was in the range of 10 to 3K to, and here to until 20K, and they kept entering the market right here. Meanwhile, we had this rise, obviously, because stablecoins entered the market, they bought, and so the crypto dominance itself raised. Okay, in these cycles, instead, we had this change in the trend, where in the bull run we had the crypto dominance falling. Meanwhile, people from these cycles, probably, and high network investors and companies and everything else, was taking profit and just taking this profit to the side of the market, just letting this profit stay in dollar denominated assets or stable coins in this case. And they raised, and for all the bull run we had, they raised until we had that large drawdown that took a little bit further down. Here we had this peak that took us a little bit down during the last 2021 May, June, July drawdown, and then raised again, re-entering the side of the market for the stablecoin, and putting down again, having a drawdown instead in the crypto dominance itself. And in this last bear, since the November all-time high, we had this going sideways until now, when we had the last drawdown to 20K, and where we've seen the Bitcoin dominance, the rising as a response of this huge drawdown. So the de-risking of the market itself, where market participants were actually going into Bitcoin as a safe haven more and exiting the market as a whole, watching more for bonds and more safer havens. So what changes now in this cycle in comparison to the last? That every time we're having a bull run, market participants are actually putting us sideways. They are not actually entering the market, and so reducing their stablecoin exposure. They are actually taking profit and putting these profits to the side of the market. Meanwhile, in the bear, we are not seeing this kind of movement to the downside for the stablecoin itself, and instead we are seeing this raising again. That means that in the long run we could possibly expect the market to react in bull run to the opposite, where we had this huge accumulation of stablecoins. That could ever be even more people entering the market also. This could be even another case where people entering the market in mass. Massive adoption means that more people entering the market are actually entering with stablecoins. Stablecoin dominance could raise, and so in the next cycle we could experience this kind of a raise in the stablecoin dominance itself, and we'll may never reach this low level again. We may reach 20. As you see, we reached the 10% in stablecoin dominance at the very end of the bear market, and start raising up to 30% that we reached also in the bull run in November, in August, September, November. Okay, in August, September, and October. And we could see the same thing again happening in the next bull run, when we'll have a mass adoption, and so a rise here in stablecoins. And I'm reaching the point right here, so just bear with me another 2 minutes. When we reach the point where we are having again a 40% maybe in stablecoin dominance at the very next peak of maybe the next bull run, where we that are now hodling coins, that are accumulating and stacking coins, are taking profits at the very high of the market, and so stacking this stablecoin dominance up, we'll probably see a 40% waiting to enter the market more deeply down, and will may never reach the 10% we had right here. So stablecoin dominance could raise at a point in the market where we'll have a huge amount of stablecoins to re-enter the market for the next market itself, and this could at the very end help us reach the 100k for Bitcoin, or the 10k for ETH, or even more if we keep going minting stablecoins like this. And when de-risking in bear market, when de-risking, also keeping more stablecoin aside of the market to re-enter, and getting a little bit down here to 20. Then maybe in the next 2 cycles we arrive to 30 in the bear market. In the bear market we reached 50, and in bull market could be a trend, okay, that could raise for the next few generation ahead. The problem here that we are not taking in consideration for the last final part of this study case is actually that we could very well see regulations that limits the amount of stable coins that a certain centralized emittent has at its disposal, and so that they are not creating a financial instability into the ecosystem Okay, so if maybe, I don't know, I make an example here. USDC is having a total share of the USD market, denominated in stable coins. So they have a reserve of 1 to 1 for every stable coins, of 20-30% of the entire USD market. This could very well have a deeply impact on the financial stability of the system, because if a centralized entity that is not in the market, that is not government, is not with the government, okay, like the Fed is not, it's a centralized entity itself, private, not even a little bit governmental, it could be a very well in great danger for the system itself. So I'm probably thinking right here that there will be this kind of regulations, and we are not seeing 50, 60, 70%, because there will reach a point where the regulation will limit their disposal. But at this time, and will be CBDCs too, okay, probably if we're taking in consideration only stable coins, this could be, but if we take in consideration CBDCs, we could very well see 60-70% of stable coins, and a Bitcoin dominance reaching down to 20-15% with ETH also in the midst of the bear market, because of this fact right here, because we do not know if CBDCs are entering the crypto market, or if CBDCs will fail and Bitcoins will be the actual unit of account in the market itself, and medium of exchange. So we are assessing what could be in the next few months, years, and next cycles, but speculating on the fact that this could change or not. In this case, we are just watching this happening again, and we are seeing for these cycles in particular. So this is the part where we are talking about how can this affect this cycle. In this cycle, we could see very well see that 28% of USDT denominated asset could re-enter the market, reaching 20%. So an 8% of the total market cap right here could very well re-enter the market as a helping the Bitcoin dominance and the Bitcoin price reach those high that we are expecting from it since the last year. And for me, this is the case. We are now just waiting for this stablecoin dominance to reach that point in which we are expecting the Bitcoin to reach that price. This is the study case today. If you have any kind of advice, hints, or something I didn't take in consideration, I'm very happy to know what you think about that, and what I am taking this wrong, because I like to have conversations with you, and I like to get better at analyzing the markets. So anyway, if you have any question, I like to respond. I'm on Twitter. I try to reply at every tweet I'm replied to. So I'm here for this, to not only to educate, but to entertain and to learn with you about the market, and together to be the best we can be. And this is it for today anyway, guys. I think I'm going to sleep, and I'm going to bed right now. So we'll see Sunday, I think, Sunday, yeah, I will do a live at 14 p.m. UTC. If you want to be there, I will be there for half an hour, maybe 1 hour if you have more and more questions that I have to respond to, and we'll see a reply to. Sorry for my English in this case, and we'll see there. For now, it's everything, and this is ChainLog Analyst here that greets you. Cheers.